Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is Wednesday, April 10th, 2024. The notable data coming out this week, as I talked about yesterday, is CPI print today, and we had it come out. And tomorrow we have PPI, which could also move markets, and bank earnings on Friday. As I've been saying, will likely go get a little crazy, and things got a little bit crazy today. And so we'll go through some charts and talk about a few different things. Just real quick on the CPI readings, we have the regular CPI last month 0.4. This means prices went up 0.4% from it would be February to it would be January to February, and then this is February to March. So the March reading is 0.4%. Sorry, the February being 0.4%. So that stayed flat, but they were estimating it would go down. And then for the core, same thing. It's staying at 0.4. It was expected to go down. And then when you take a look at the numbers year over a year, last was 3.2. We expected it to actually go up, and went up a little higher than expected, only 0.1% higher year over year. And then for the core version of that, you can see here the last reading was 3.8. We expected it to go down, and it's getting sticky. So it's stickier than we expected. I talked about yesterday how a lot of people have been expecting this CPI print to be cooler than expected, but obviously no one can see the future except for me because I have a crystal ball. But yeah, so it was a little hotter than expected, and a lot of things happened today. First chart I'm going to bring up is the S&P 500. Based on the fact that it went down an entire percent today, you'd think, oh, that's a pretty big deal. And it is. 1% in one day is a pretty large move. However, we are still within, funny enough, like I've been talking about this last Thursday red candle. We did not close breaking below it. And so this is not like a confirmed bearish signal as far as chart rating goes. I really think here that before the market decisively decides to break out of that candle, we'll have to see PPI and bank earnings on Friday. So we might see the real action on Friday or next Monday. Very similar thing going on in the Qs. The NASDAQ, this candle was still within this red candle of Thursday. The VIX is moving sideways nervously. Typically when you have a move up and a sideways consolidation, the more likely way to go is up from here, and that is what I'm expecting, but we'll see what happens with that. The CPI readings coming out today struck some fear in markets because yesterday's close was at 61. We dropped 7 points down to 54, a neutral stance on the Fear and Greed Index. If you've been following this show for a while, you know one of my favorite things to look at is high yield corporate. This is risky bonds, basically companies that have to pay high interest on borrowing money to do business. And when this goes up, it means risk on, and when the value of these bonds drops, it means that investors are worried about bankruptcies. And what's going on here? Absolutely nothing. HYT continues to refuse to budge, either moving higher and higher or lower and lower. We've been going straight sideways, it looks like, since January, really. This is not very epic movement compared to what you can have in a major bear or bull market. Partly because of the high CPI rating, we have Fed funds futures. This 5.5 or 550 you see here, this is where the front end of the curve is right now as far as interest rates go. And you can see for the 1st of May, for that meeting, it's predicted that the Fed will keep rates at that level. And it looks like now we have the same probability going all the way through July. and we don't have a more likely cut all the way until September 2024. So that is notable. I think that this can easily. This is not. It's important to realize that Fed funds futures are very important to be paying attention to and have a general sense where things are. But as we've seen, these things can flip back and forth fairly easily. But we are looking towards the market is pricing in more tightness, and as a rule, I like to try to get myself to agree with what that market is suggesting to give me the best guidance that I can for where I think we are in the short term. And so this is where we are. Again, PPI might flip it the other way, but I have to get myself to agree with this. I had been the one a while ago with the crystal ball had a lot of smudges on it when I was suggesting that for sure we were going to have 6 or even more cuts in 2024, and it looks like there's even a pretty strong possibility we won't have any cuts. Take a look, all the way through December, we still have, a 12% chance of no cuts, and only one cut being 34%. Again, you do have to add these together, so it's actually 34, like 46 or something like that, 46%. So it's almost 50-50 of cutting once or twice between that meeting. And then there's one other notable divergence here. I think it's very funny to see this. The April 2025 contract is pricing in 2 cuts. So from March to April, thinking 2 cuts there. So to me, that says that the market's like sort of pricing in like for sure things are going to collapse by then. Like, almost like a exponential kind of curve kind of a thing. It'll cut slow and then expand. And then if this continues, it's like, looks like we might be going straight. It looks like it wants to go straight to zero at that like rate of change or whatever. Moving on to the 30-year bond yield. We had quite a jump in it today. Of course, this market, again, it closes at 3 p.m. before the market closes, and so people still trade bonds after this chart finishes. I'm not sure why. It doesn't matter. But yeah, so we had a pretty big move in the 30-year bond yield. I think it's important to realize, though, that it does look like it broke through it there, but if we look at the value of these bonds in TLT, which tracks it pretty accurately, we did not actually break this little trend line here developing, and so it'll be extremely interesting to see if we break below this and confirm it and we have a continued bear market. It looks like it's trying to go there right now. It's trying, and sorry for anybody that's been buying bonds, to myself included. However, I don't regret it. One thing about investing is that whenever you're buying something, you have to assume that you're going to be wrong and know how you're going to deal with being wrong. Not to say that I'm wrong. Like I said, I'm 40% in long duration bonds, and I've been saying if the yield gets up to 5%, I'm going to move to 50% because I think that's a great yield. I think that's a great deal for a 30-year bond in a country with an aging demographic. It's just like, for me, that's just common sense at this point. While the inflation target is 2%, it's like an easy play. I hope it breaks down. I hope it goes against the fact that I've been to maintain 40%, as the value of the bonds drop, and plus it pays dividends, so you gotta reallocate, and so I've been buying this whole time to maintain, and so it'll be very interesting to see where we go from here. Another little favorite indicator that I like to look at is wood, and I've pointed out longer term channels that we've been seeing. I'm not going to draw the lines now, but this is a top of a pretty good solid trend line, and I've been saying this looks like it wants to turn over, and it today it really is looking like it is turning over here in wood, and this is a decent leading indicator of where things are, where things might be going. And that's all I have for market charts today. I noticed one opportunity. I don't like to talk about stocks as individual stocks very much at all, but this one stuck out to me, and I'm just going to go through a quick valuation, a quick easy way to value a stock using Benjamin Graham's method, the guy that wrote security analysis, which is considered to be like the Bible of Warren Buffett and Michael Burry and all of the most successful investors of the past 100 years, basically. The company I want to bring up is British American Tobacco, BTI. Currently, it says it has, this isn't always the most accurate from Yahoo, but they say the forward dividend is almost a 10% dividend, which is very high. You know, it's not healthy. It's not super healthy to do that when you have negative earnings, but there, you know, I'm not going to go into the full depth of a Graham analysis of a stock, but we're going to go over a basic valuation and why I think this on the face value looks fairly attractive. Before doing that, well, how can a stock have a 10% dividend when Apple is like, 0.1%? Like, how can Apple only pay that little of a dividend and this has to pay a 10% dividend? So where's the risk here? One of the biggest risks that I personally see today is actually synthetic nicotine, which is what they use in all these vapes. Every kid has a vape. If you have kids, your kid has a vape, and they're using it every day, and they are addicted to nicotine. I swear, everyone has these things. You see them in the gas station. If you don't know what they are, there's these little square boxes, and they have this liquid nicotine in them. And depending on the price and availability of synthetic versus natural, some people prefer natural, I guess. Some people prefer the synthetic, and then there has to be you have to decide based on the price. And so there's a competing market, being the synthetic nicotine being made for these products. I had been under the assumption when I had first gotten into these companies, Altria is the other one, tobacco companies. I had been under the assumption that all of these vape products were using tobacco, and I was like, well, this is great, 9% dividend, and everybody's picking up smoking again. I'm going to be rich. But the serious competition for me is the synthetic nicotine, like I'm saying. Now, with that said, all that has to occur is a balance of prices where, certainly with that on the market, it makes tobacco less, it makes it less of, it has a lesser ability to be attractive as an investment. This is one of those, like, new inventions that can kind of take over. But, the thing is, these vapes have been around for a while, and this company is still making money. And, if we take a look at earnings over the past 10 years, of course, 2017, I think this was a spinoff here. Sorry, I meant an acquisition, actually. I say spinoff because normally, a huge dividend is like this, like they sold a huge portion of their company and they gave the amount to the shareholders, but actually they had acquired Reynolds, a company with basically, they increased their cash flow a ton through the acquisition, and they were able to pay a massive dividend in 2017. And so, if I take ChatGPT and I just highlight these in here and take a look, okay, well, what's the average of the earnings over the past 10 plus years? This is something like 13, 14 years. Even without counting that huge dividend in 2017, the average is still 350. But, you know, assuming the better of it all and the fact that we have inflation and, you know, I'm using this price of 405 if we do some quick math against the stock price of $29, which it is at right now. We have a PE ratio of around 7.5, which for a company that is like basically a consumer staple, I find that to be a very attractive, very, 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 very attractive valuation. And you know, if we take a look on a chart and zoom out a little bit, you know, you can see we've been at this price as far back as 2006, 2007. 2009 we hit it again. We had a pretty good run up, and you know, I don't see anything really wrong with, you know, tobacco in the future. I think that this is a product that will continue to exist and pay out, and it looks to me like it's potentially undervalued. It's certainly less overvalued than everything else out there, and so if I'm looking for something to buy, eh, I might be getting some of this actually. Some more of this. I already have a good amount of it, but I might be getting a little more soon. That's all I have for you for today's show. I hope you enjoyed, and thank you very much for watching. Robschild.